Hello investors and future investors, welcome to the channel. For today's video, I'm going to be showing you how to use $100 using one simple option strategy and also using just one stock to show you how to go ahead and use that $100 in order to turn it into income. Now, if you are new to options trading or you're trying to use options to make some additional income, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'll be showing you how to use $100, one stock, and one simple option strategy in order to grow your account portfolio. Now, as per my last video, I did show you that simple option strategy that could be used using just $100. So what I'm going to do today, I'm going to show you a practical example showing you a different stock in order for you to go ahead and master this option strategy. Now, as you guys know, I like to highlight option strategies and not stocks. I always emphasize you guys learning the option strategies because once you're able to master it, then you could go ahead and use these option strategies with any other stock of your choice, of course, after you do your own due diligence. Now, before we go ahead and get into this video today, and if you guys want to also use that $100 in order for you to increase your learning of options and these option strategies, then I would highly suggest that you go ahead and download the Moomoo app. Deposit that $100 and you will be able to use all of Moomoo's free resources in order for you to become better with options trading. Now, if you want to go even further and help out the channel, then you could go ahead and use the Moomoo link in the description below. Now, you guys know how we do it. We like to go ahead and get down and dirty with options. For today's video, we're going to be highlighting none other than CoreWeave, and that ticker is going to be CRWV. Now, for those of you that don't know what CoreWeave is or what CoreWeave does, I'm going to go ahead and just read this out for you. Now, I did make a video before this. That video is titled How to Trade CoreWeave. I showed you option strategies that can be used because CoreWeave was trading at an insanely high premium and insanely high prices. So I will go ahead and link that video in the description below. Go ahead and check out that video first. Now, this is what CoreWeave does, right? According to Robinhood, CoreWeave is a cloud infrastructure company that provides high-performance computing resources optimized for workloads such as artificial intelligence, machine learning, visual effects, and batch processing. Now, that's just a fancy way of saying nothing. So let me just break it down to you in simple terms. You guys know I like to keep it simple. So what CoreWeave actually does is that CoreWeave actually rents out powerful computers, particularly those with many graphics processing units, or better known in the AI or semiconductors as GPUs. They go ahead and rent out these computers to other businesses and developers so they can build, train, and run the AI models faster and more efficiently. But this is where CoreWeave really shines. They offer these as a cloud service, meaning customers can access those computing resources over the internet without having to actually own the physical hardware themselves. So CoreWeave is pretty badass. Hopefully I could say badass on YouTube. Now, let's go ahead and get down into these option strategies. So let's go ahead. We're going to scroll down. We're going to go to trade CoreWeave options down to the bottom in order for us to go ahead and open up our options chain. Now, the channel is growing. Thank you guys for subscribing and liking our videos. So for those of you that are new to the channel and new to options trading, all this information down here in its entirety represents the option chain. What the option chain does is that it gives us enough information in order for us to go ahead and make a very informed decision before entering any options contract. Now, speaking of option contracts, before I go ahead and demonstrate these option contracts in detail, I want you guys to do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. Favor number two, always make sure to have an exit strategy before entering any options contract. That way, if the trade do decide to go tits up, then at least you know how to get out of the trade. And lastly, these videos are for education and entertainment purposes only, and it represents what I'm doing with my personal portfolio. So once again, always do your own diligence. So the strategy we're going to be using for CoreWeave with $100, we're going to go ahead to sell. We're going to go ahead to put. And we're going to leave the expiration date here, which is going to be November 14th, which gives us 3 days to expiration. The reason I'm going to be using such a short dated expiration date is because of the nature of CoreWeave. CoreWeave is extremely volatile, and I'm going to show you what I mean as the video goes along. So let's go ahead now and we're going to go ahead and choose our strike price. With the sell, with the put, and the expiration date right here, we're going to go ahead and choose our strike price below the current share price. What we are going to be focusing on, we're going to be focusing on this column right here. We will be looking for a chance of profitability of around 75% or higher. So the 76% closely matches what we're looking for, and the strike price that coincides with that is going to be the $84 strike price right here. Let's go ahead and we're going to select that. Now, please make sure you watch the video before this so you know what option strategy I'm using here. I'm not going to go into detail with this option strategy. So now we're going to go ahead to our second leg of this option strategy. Let's go to buy, maintaining put, maintaining our short dated expiration date, and we're going to choose the strike price right below. Let's go ahead and click that. The reason why we're going to choose the strike price right below, once again, if you haven't caught the first video, is because we want to use only $100 as collateral. So this option strategy is going to be known as the put credit spread. Now, the amazing thing about the put credit spread is that the barrier to entry to get into this option strategy is very low. Like I mentioned, if you were to do this option strategy right now, you'd only have to spend just $100. But here's the nice thing. This is what's known as an income generating option strategy. So when you go ahead and you execute this option strategy, you're going to be receiving $42. Now, essentially what you are doing is that you're risking about $60 in order to make $40. So let me explain. When you go ahead and do this option strategy, you're going to be receiving, let's say, $40, but your collateral is going to be $100. So that means all you're risking is just $60, which would be your $100. You're going to subtract the amount of money you receive. So you're risking $60 to make $40. So in my book, that's a pretty decent trade. Now, I did mention that this stock has very high volatility. So what we're going to do now, we're going to go ahead, we're going to open up the Greeks, which is also known as the secondary option chain, for me to show you what I'm talking about with volatility. So as you can see here, this is the implied volatility, or in the option world, what we refer to as IV. Now, IV is extremely high right here. It's about 100%. As an option trader, if you want to make some juicy option premium, you're going to be needing some kind of high IV. So just for analysis, here's how IV works. Any IV from 0% to 50% represents a low IV. So that tells you that the stock is not going to move very drastically. Now, any IV from 50% to 100% tells you that that stock has medium volatility, and that is the range you want to be whenever you're going to be selling options, when you're doing selling option strategies only. Now, any IV above 100%, that's extremely dangerous territory. Stocks with IVs trading above 100% can be traded, but you need to be extra careful. Now, just as a comparison, I'm going to go ahead and show you how IV makes a huge difference. And let's go ahead to the secondary portfolio right here. Okay, so here we have one of the most highly traded ETF, which is going to be the SPY ETF, and that ticker is SPY. So we're going to be implementing the exact same strategy. Let's go to trade SPY options. Now I do these option strategies very often, so I'm very quick with it. So let's go ahead to sell. We're going to go ahead to put. We're going to be looking for November 14th, the exact same strike date right here. Give us 3 days. Once again, we're going to be looking for the 75% chance of profit. Let's go right here. That's going to give us the 679. Let's go ahead and select that. We're going to add our second leg to it now. Let's go to buy and let's go to 678. Let's go right here. Now we're going to go ahead and open up the secondary option chain, or the Greeks. Now, I just showed you the implied volatility for CoreWeave, which is at 102% IV. As you can see here with the SPY ETF, this is at a 13% IV. So what this tells you is that the SPY ETF is not going to have high or quick swings in the upward or downward direction. Meaning, if you were to go ahead and have your next cup of tea, when you come back, this stock would not move very much with their share price. Now, before I go ahead and go back to CoreWeave, I want to show you something else as well. With CoreWeave, you're going to find it hard to get into the trades and get out of the trades. The reason for that is going to be because of the volume. As you can see here, like I mentioned, the SPY ETF is one of the most highly traded ETFs out there. So the volume on this contract is around 9,000. So that tells you it's easier to get into the option contract and get out of the option contract. Now let's go ahead and go back to CoreWeave. So as you can see here, here is the volume on CoreWeave. It's only about $2,600. So in order for you to go ahead and do that option strategy, you have to the side here, which is known as the limit price. So what you want to do the bid ask spread, which is $19 here and $65. Robinhood usually gives you the middle ground, which is $42. If you have any difficulty in order to fulfill this option, all you need to do is go ahead, you go here and you edit the price. Let me go ahead and show you that live so you know how this is done. So let's go back. I'm going to simply go in here. If I'm having difficulty getting this contract filled at 42, I'm going to simply go back in. I'm going to put point, let's do 38. This is just an example, by the way. And I go ahead and resubmit. And then if it doesn't get filled right away, then you keep doing this until you get a fill. Now, the reason why I want to highlight CoreWeave is that if you were to do CoreWeave right now, let's go ahead and go back to the original. I want to show you the ROI, or what's known as the return on investment. So that figure was actually 0.42. So let's get back to it, and then we're going to resubmit. So for doing this option strategy, you will be receiving a gain or return on your investment of around 42%. Your return on investment is going to be the percentage of returns you get based on the amount of collateral you left. So in this case, you're only going to be wagering, or betting rather, $100. Your return for wagering that $100 is going to be $42. You're going to divide your $100 by your $42 here, and then you're going to be getting 42% return. 42% is extremely high return, and most might say that's even risky. So what you can do, if you want, you could go ahead and you could change your parameters just a bit. The whole purpose of this video is to show you how to make a 75% chance of this trade going in your favor. So if you are risk adverse, what you could do, instead of looking for a 75% chance, you could go ahead, change the parameters a tad, and then go ahead and choose a lower one. So you see we have 76% right here. If you are risk adverse, what you can do, you could go ahead and go choose probably like the 80% chance. Let's go ahead. We're going to do that. I want to show you guys how to do this live so you guys don't make any mistakes. You guys remember to go ahead and change all the parameters. So I'm going to be going ahead and choose the 82 right now. Now, because I did that, I have gone ahead and changed the option strategy entirely. So always remember that. So now I'm going to be going back to my buy. I'm going to be unhighlighting this one. I'm going to be going below once again. Let's go right here. And then once again, I'm going to have to resubmit. And there you have it. So because we changed the parameters right now, the amount of money you're going to be receiving has reduced drastically. But do not worry about the money. Remember, worry about the ROI. So now you're going to be receiving an ROI of 13% instead of what you previously was going to get of 42%. But here's the next big thing that everyone misses. By going down and increasing your chance of profitability, what you have done now is you increase the odds of the trade going in your favor, because now it's a lot harder for CoreWeave to hit the $82 strike price than it was to hit the 76% strike price. Let's go back up to it, which is going to be the $84 here. So CoreWeave needs to go past the $84 here to go all the way down to $81. So you have increased the chance of this trade going in your favor. So there you have it, investors and future investors. This was a more detailed video, and I have been making these simple videos for a long time now. So I believe now it's time for me to take off the curtains and then show you guys what goes on behind the scenes while making these option strategies. If you guys are ready for me to remove the curtains, then go ahead in the comments below and just put in no curtains, so I can know I could go ahead and making these videos a bit harder, give you a lot more information that's going to help you make much better decisions with option trading and change the odds of all these trades working in your favor. There you have it, investors and future investors. $100, one stock, one option strategy. This is the option strategy I'll be using, which is going to be a put credit spread in order to trade CoreWeave right now. Now, I haven't mentioned this yet, but CoreWeave just released earnings. So by the time you see this video, the premiums are probably going to be different. The premiums are still going to be high, but they're going to be a bit lower than what I'm showcasing right now in this video. Now, for those of you who do not know, the put credit spread is what's known as a bullish option strategy. So you only want to implement this option strategy if you of the mindset that the stock is going to be going up, or it's just going to be trading sideways. Or if it does going to come down, you know it's not going to come down to the strike price that you chose. So investors and future investors, if you haven't already, now be the perfect opportunity for you to go ahead and like the video. Subscribe to the channel. Make sure to hit that notification bell to get an alert when I post these videos. Now, the whole purpose of me posting these videos and trying to give you as much information is that I want to help you start generating income from options trading. Now, if you do know of anyone out there struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start generating income from options trading. Now, until the next video, keep pushing your investments.